Good afternoon. Good afternoon, Jack. How are you today?
I'm doing well, Shawn. How's your day going?
Oh, so far so good. So far so good. Jack, this is Lending with Purpose, man. My name is Shawn Williams, and welcome to Lending with Purpose. So this conversation is about empowering everybody here, you, with valuable information, resources, and engaging conversations like we're about to have with clients and friends that help you navigate the world of lending. But Jack, not only lending to enhance your life. And so today we're here. We're having a conversation. And I'm going to start with a quick little story. We were just, ladies and gentlemen, Jack and I having a little bit of a debate about salespeople and such, right? And he's like, "Well, Shawn, you can't say that you're not a sales guy, and I'm a salesperson, and blah blah blah." And I'm like, "Well, yeah, absolutely, I'm a salesperson, but I'm working with you, and if I'm going to sell, you can't sell me." So I was thinking about a relationship that we formed at Fortis Mortgage that has over the years gone really well for us, and it started off like honestly really rocky because every time I would contact this particular account executive, he would always be trying to tell me about how great their products are, how great their service and their system is, and I'm like, dude, I understand. I wouldn't be calling you if I didn't think your service was good and if I didn't think your products were a good fit. Um, I don't need to know any of that. Like, I want to know the process and the system and the procedure, and I need to know like what the steps are because with me, I'm very and Jack, you know this. I'm really like methodical, and so there's processes and procedures and stuff like that. And for me, it's really hard for me to work on the fly. And so I'm not saying that's a good thing. I'm not saying it's a bad thing. That's just me. And so the reason I'm telling this story is because I really think like all of us that are listening, especially when you're working with people and you're in a partnership and working together, try to actually understand the other person and what makes them be their greatest self. Just because even Jack's he likes to talk on the phone. I'm not a big phone talker. Like I feel like I can solve the world's problems with the text message. And so Jack's doing a better job at texting me. However, on certain things, I'm realizing, all right, if I send Jack this text, I might as well just pick the phone up and call him and talk through it because that'll get us to a better place. But with that said, I just Jack wanted you to know you and I are good, man. Like you're here. We're gonna talk about non-QM
Yeah,
loans today. Looking very forward to that. So tell us who you are, what you do, and we'll get into our non-QM
yeah,
conversation
I,
today.
I appreciate it, Shawn. Folks, my name is Jack Levy. I'm a senior account executive with Oak Tree Funding. Um, just give you a little background. I've actually done retail originations. I've been a loan officer. I've been on the secondary side of it in the correspondent type world after the loans are closed. Um, I've been a real estate agent. Folks, I'm still a licensed real estate agent, but I'm not active. So I've wore a lot of hats and bring, kind of a wealth of knowledge from those experiences, so I can relate um, to the buyer, the seller, the real estate agent, the title company, etc. Um, but that leads me here to this point in my career. Non-QM lending. Let's really take a look at and
Well,
define.
hold on. You had a fun fact earlier that I was
Oh,
hold that thought and tell us about that when we were on the
the
call.
auctioneer.
Oh
So
yeah, let's talk about that.
I
Like that's
thought that
pretty
was the fun fact. When that
yeah, the auctioneer.
I was a licensed auctioneer. I did real estate auctioning. We did distress sales. We did, it could be an estate sale, that sort of thing. But it was mainly real estate, and that's a much slower auction process. You watch the Meekum on TV with the car auction. Those are really talented auctioneers, like really talented. Um, Real estate, not so much, a little slower pace, but yeah, that was a cool little stint doing that.
That's pretty cool. At the end of the show, I'm gonna have you auction off something for us. But look, like, give us an overview of like non-QM mortgages and how they differ from traditional mortgages. Number one, and then like let's talk about borrowers and scenarios that typically benefit from non-QM
That-
loans.
that-
Like we have a great one going on right now of a
yes.
borrower that's benefiting. But tell us like the differences. Like many folks hear the word non-QM and they don't know what that really means and what the difference is. A lot of times people think that they're unable to purchase a home, and so I really feel like with these non-QM loans, we're expanding home ownership opportunities. So like, yeah, just tell us the differences and who benefits from
Absolutely.
these.
Shawn, absolutely. So let's say non-QM stands for non-qualified. Some folks will call it non-agency because it's not, it's not, you don't have Fannie Mae or Freddie Mac, these agencies that are, buyers of this. This is generally goes to securitized Wall Street, big insurance companies, et cetera. It's not the same liquidity that we have. So it's a little different. But to Shawn's point, there are underserved markets, underserved borrowers out there. There's a huge market for this stuff. And it's not rocket science. So let's talk about one. There's a couple programs that are very popular. The first, and you talk about an underserved segment of the market, a lot of times it's going to be a self-employed individual. And you say, well, self-employed, why? Well, a lot of times when it comes to the tax returns, okay, they are not going to qualify based on those tax returns. These folks write a lot of things off as they should. So when a loan officer looks at this and say, wow, this debt ratio, I can't make these numbers work. I'm sorry. If somebody's been told perhaps no, or you're going to have to wait, or you're going to need to do this, that may not necessarily be the case. Okay. So one of our biggest programs, and I'll call it an alt doc or alternative doc. So basically you're taking your self-employed individual and we can qualify them a bunch of different ways, actually, but the most popular way to do it is these folks are depositing the cash flow of said business into either a personal or a business bank account. So we can look at either 12 or 24 months of these bank statements and derive a usable monthly income that we can, come up with a debt to income ratio that actually works. Now, that's huge. Now, you can look at it like that. You can look at it as we have a 1099 version. A lot of folks are 1099. They're self-employed. They still write a lot of stuff off. We have a profit and loss version if they have a CPA that does their taxes. So these are creative ways to qualify someone income-wise, because in this day and age, if you're buying a primary residence, you absolutely have to demonstrate the ability to repay the debt with a verifiable debt to income ratio that is acceptable to the investor or the lender.
Got it. And so, Jack, like, so for instance, I'll only speak to the examples that we have recently. So there's two that I can think of. Number one, there was a nail tech that we're working with right now, right?
Love
And
them.
she receives a 1099 at the end of the year because she works for she's self-employed, right? She works for herself. However, she's at a salon that pays her the money that they collect for the work that she does, including the tips and such, right? And so every single month she gets this money and she's depositing a large sum of money into her bank accounts, right? At the end of the year, however, based on the amount of stuff that she has written off, it's not the same amount of income as what we could use by taking 12 months of her bank statements and sourcing all those deposits that she's making that are attributed to her business
Sure.
to get income. So now she gets more income, right, for those deposits that she made versus us having to use her tax returns and net out all of the expenses that may be above and beyond the normal expenses that we're going to take off the bank statement stuff. The other one is like a realtor, for instance. I didn't realize how much. And now they seem like that they know more about this product, but there are many realtors that could benefit from a product like this and a program like this as well. And so
100%.
we have one going on right now that is benefiting from it in a tremendous way because they don't have to show their tax returns and such. And so even Jack, as you know, in our industry, for a good 12 months or so, it was very slow. Like it was slower than what we were accustomed to. And so some people had like declining income, but
Yep.
here over the past, it's been hit and miss over the past 3 months or so. It seems like activity's up a little bit, so people are starting to make a little bit more money. And so she was then able to explain, hey, this is why I had a lull for a period of time, and this is what's going on now. And so it's just a great opportunity for someone who's self-employed to get in these types of loans. Like, so let's talk about consumer education, right? And why it's important to understand, because I'm really honestly just embracing this because I see it as a tremendous opportunity to help a lot of people, like you mentioned, who are underserved. And so for me, I'm still learning a good bit as well. Like, how'd you get so much knowledge on it? What do you educate people about? And like, what are the key elements that people should be looking for when getting into a non-QM mortgage to make a good decision?
Well, I think it's about documentation and of course presentation. You want to demonstrate to the underwriter that you have a consistent source of income, and you can do that a couple different ways. We do want to see that, and you mentioned a nail technician, you mentioned a real estate agent. There's so many. You have the gig workers out there. And that may not be the best fit for this particular program, but contractors. You mentioned the nail salon, the owners of the nail salon. I've done numerous loans for them, and they make consistent, good income. And when you're sourcing that, and if you're a loan officer or a realtor, these are the service industries that you're going to be a customer. It's about feeling people out, and people like to talk about their needs if they had a situation where, man, I'd love to buy a house, or something like that. But I go back to the underserved. These folks are good. It's not like this is a real risky credit risk or something like that. When you drill down and you start looking at this, and was like, wow, this is a consistent income stream every single month. That's really what the underwriters are looking for. Generally, we're going to be, it's the rates are going to be a little higher. The terms are going to be, a little more of a down payment. They're going to have a little more skin in the game. But these are good borrowers. These are good loans. They perform extremely well. If you look at the actual performance of this stuff performs better than FHA or even the agency loans in terms of delinquency. So these are good borrowers. These are good loans. It's not like we're doing some sort of, the connotation of subprime or these are good borrowers with good credit, and we're satisfying a need to an underserved segment of the market. And it's really been growing. And I know, Shawn, I mean, you can see the opportunity, to help people. At the end of the day, I think that's what we're doing. And nothing feels better than getting somebody into their first home that they've been told no before, multiple times.
Right.
So
Right.
it's a win-win-win situation. But again, I have to say no a fair amount. But if it fits in the box, we do a lot of this all over the country.
Right. And so obviously we're mortgage brokers, Fortis Mortgage, and broker owner of that company. And so like as we, Jack, what advice would you give to someone like myself as we start to work with more referral partners and folks that are asking about this, like, why do they want to like add these types of services in their product
You know,
mix? How are we able to help them? Like, what's so
I,
great about it?
you
What do
know,
I tell them?
I tell them that, how's your year to date volume? And they need to capture every single deal. In the past, when they were busy, okay, they weren't thinking outside of the box because they didn't have to. And I hate to use the saying or the analogy, low hanging fruit. And that applies to loan officers as well. There's a lot of loan officers that's like, oh, you know what? I'm going to refer that to my buddy Shawn over at this program. I don't do this. So many guys have told me that. And then when the volume slows down, they're like, well, how can I supplement? So I think that the non-QM is not going away. It's a growing segment of the market. So, and it's not rocket science. It's about educating the originators and educating the referral partners. And I do at least one event with a referral partner every month, whether it's remote or we can do like a lunch and learn event. You get as many of your realtors, referral partners, and just to help them, educate them about these underserved segments of the market that, I mean, they're just, chomping at the bit to have somebody assist them and help them attain their dreams. And I love doing purchase money. Let me just say that right now. I purchase money. There's an immediate need. There's a deadline. Everybody's motivated. It's an exciting time for the borrowers. They're motivated. Nobody's dragging their feet. I love purchase money. And the more realtors, they need to know. They might be like, you need to do this, and this, and come back and talk to me. That may not be the case. You gotta, if you understand the options that they have, you may say, well, I don't see any options for you at this point. Or I think you need to talk to my guy, Shawn, over at Fortis and have a 10-minute conversation with him. He's been great. He got somebody in a house that I never thought, or something like that,
Right.
If I'm the referral partner, just have somebody that knows about it, have a brief conversation with them. I size it up all the time. Shawn might have the conversation with the borrower. He calls me and I have a 5-minute conversation with, or a text or an email. That's what I do all day.
I'm texting. Yeah, I'm texting. So, Jack,
it does save time, man. I'm old school, man. And
you don't have to be self-employed,
I know,
though, right?
Shawn, I get it, man, because I'll get on the phone with, I had a conversation with my friend Dave, he's an originator. And gosh, I mean, it was 15 minutes before we even talked about, I don't want to say it's 15 minutes wasted because there's laughs, there's catching up, and he's a friend of mine. But at the end of the day, I could have been texting, I could be returning an email. It's not the most efficient way to communicate for somebody that's in sales and has emails and calls to return, et cetera, et cetera. So, Shawn, you might be.
I'm going to turn you into a texter, huh? You're going to be a texter now, Jack. No, you're fine. Like, honestly, I don't know if my way is the best either, because I often find that sometimes, like, words get lost in translation. You can't hear the feeling and the emotion behind it. And then if you're really trying to explain something that you feel is complex, the other person really wants to get clear on the other end, a phone call is worth it. So I'm getting better at the phone calls too as well. But like on the non-QM loans, because I do have a couple more questions about that piece. Like, you don't have to be self-employed, right, to do non-QM loans. They're non-qualified mortgage loans that benefit others too as well, right?
You had me, I was like,
it works great for self-employed people, but who else does it help?
So, and I looked at the guidelines today because I'm thinking like, well, I'm going to need some stuff to talk about here. So I want to talk about bad things happen to good people. We all know that. Is it a housing event or a credit event? You know, believe it or not, it could be a foreclosure, a short sale, a deed in lieu, a modification. I've seen people that have high 600 credit after 1 year after that. So 1 year seasoning after an event like that, we could absolutely look at them. It could be full doc, it could be bank statement. It's all falling into the non-QM, but you have, forget about it if you're with agency, with a foreclosure, or dare I say a bankruptcy. Now, I don't have the matrices or the rate sheets now. There's a price to pay for the risk involved, but at least there's a option. And Shawn knows, like, listen, hang in there, take this Band-Aid and, keep clean and work at it. And I'll get you whatever the prevailing rate is once you get back on your feet. And so we can capture folks that have had a life event, if you want to call that, because I mean, it happens. It's a divorce, a health issue, a loss of a job, etc. But a lot of those folks, a year after a major event, they're on their way back, and their credit reflects that, and there is a potential solution to perhaps purchase a home or to refinance. It really depends. But
right. So someone that's experienced like a short sale foreclosure, they could purchase quicker than if they would have to go through an agency loan like a Fannie or Freddie or FHA mortgage. They could purchase quicker. However, everybody needs to also understand, right, Jack, that the down payment requirement's higher, right, and the interest rate's going to be higher on that loan as well. And you could potentially look at it. I kind of say like more of a short-term loan, a shorter-term loan, because it gives you an opportunity to fully recover, right? And then you could get into a different term later on. But am I correct in saying that?
Yeah, I mean that's absolutely correct. On a primary residence, there's no prepayment penalty or anything like that. So if there's a solution to their needs now, they're like, well, you know what, I understand, and I know you're not going to have many options in with the seasoning on an event like that. But I've seen a situation where it was a non-owner occupied short sale, great letter of explanation. And believe it or not, the credit score was a number starting with a 7, but it was still a short sale. But it wasn't like he was, 90 days or in foreclosure, So, during COVID, you had all these forbearance agreements and stuff like that. We were very understanding about that. That's completely different. But we did see a lot of that where, I mean, the services were basically making it, hey, you got to take this. Or, it was a crazy time. But we've got that in the rear view mirror. And most of the stuff that we see now, foreclosure, short sale, not as much. I mean, there's so many more solutions before it can get that bad. And this is just a really unprecedented real estate market. But that's something that we can do. And most loan officers would, I'm sorry, there's nothing I can do for you. If, it would have to be, a non-QM lender, or, it's not like we're hard money. We have reasonable rates depending on the risk involved in it. And,
so speaking of risk, let me stop you, Jack, on that. So speaking of risk, how are these loans underwritten, right? Number one, like, how they're evaluating the borrowers on this. And then also, these loans take a long time to close? Like, is that a misconception? Because
Yeah, I think it you know, I'll give you, you know, empirical data. You know, I have one closing today that, in a word, was painful. It was a investment property cash out that was very complex. LLCs, they wanted to do it as a full doc. I can't fault them. The rate was better. They could have easily done this, and we haven't talked about the DSCR program yet, but they could have done this because it's an investment property as a no income documentation loan. But they chose to do it as a full doc, and you know, multiple businesses, this, that. It was just very, very complex. Probably took every bit of 60 days. The flip side of that, this was for a first transaction with the guy, Northern Virginia purchase. I would say we were clear to close right at or just before the 2-week mark. The appraisal came in very quickly, and I just had to extend it because there was something with was it the what? No, it was the septic, something with the septic they had to deal with. So we had to extend it. You know, we were ready to fund the loan. So
how long did that take?
2 weeks clear to close, and that's about the quickest I've seen, unless you had a complete file that you were assigning from another lender, which we see from time to time. We will do a non-warrantable condo depending on what the issue is, and they could have processed this from day one. It was earmarked for an agency loan, and then it came up in underwriting like, whoa, wait a minute. There's, you know, whatever the issue was that made it non-warrantable, and that now they're searching for a home. So every month there's a couple of those where you're.
But the computer makes a decision, right?
Pardon me?
I mean, the computer does not make the decision. This is a manually
underwritten, and that's a great point, Shawn, because our world, my world, non-QM world, it's not an exact science, and I don't, you know, if I feel very strongly about it with conviction, and I always try and work it out directly with the underwriter that's underwriting the file. But if I feel like they're missing something, we're a small, nimble company. I'll shoot an email to the head of capital markets or the head of underwriting. They all have been doing this. We've been in this for a long time. Most of the senior management is, you know, over 6 years, probably closer to 10 years tenure. So this is we're not like a startup. So, you know, we want to do loans, man. I got to tell you, the one that closed today, I told you 60 days. We were patient, you know, and it got done. You know, probably 2 extensions into it, and they were very fair with the extensions. I'm not saying it was free, but you know, we locked for 30 days, thinking we're going to close the deal in 30 days. So, yeah, you know, with a good processor, we have an excellent account manager, very accessible, very responsive. I always tell people, and Shawn, we were talking about this earlier backstage. The less the underwriter touches the file, the better. You know, sandbag everything, one big submission, come back and have a couple conditions. That's the way to go.
That's the only way I know how to do it.
And that's the way to do it. The piecemeal thing is just, a lot of people think they're doing themselves a favor by doing that. It's a disservice, because you're not the only file the underwriter has. It's like, all right, I looked at this and that, you know, so I only want them to touch it a couple times. Now, if there's a deadline, I will escalate that to the owner, the CEO of the company. I was like, look, we got to close this. Is, you know, please escalate this and have the underwriter take care of this. And at month end, those guys are amazing, you know, and I don't want to come across like I'm a sales guy. Yeah, we're far from perfect, but when it push comes to shove at month end, everybody's busting their humps to make sure these loans close by month end. Trust me on that one.
That's awesome. Thank you. So look, last question about non-QM, and then we're gonna get up out of here in just a bit. So so the mortgage industry is evolving. We all know that. And so there's what are you seeing like emerging like trends or developments within the non-QM space that consumers
I
and
mean,
referral
that's
sources should be aware of?
a great question. So the bottom line, I've never seen this much competition. Everybody is doing non-QM. So our slogan is, and it's been non-QM done right. So if you have a relationship and you know that they can get it done, it's a valuable thing to have. So right now, the big thing is pricing is very competitive. You're going to have people on LinkedIn, social media say, we're doing this special, and we did it. We had a 0.25% price or rate off the rate sheet, take a 0.25% off to the end of the month, and yeah, that certainly helped get a couple loans in before the end of the month. It's been a very volatile rate environment, but let's talk about products. We recently reintroduced, because we had shelved the products, Foreign National and ITIN. Tax identification number, another underserved market. We don't have enough time to go into another underserved segment of the market, but that Foreign National, we are doing 5 to 8 units now, including mixed use. Now, you might see that in your market, Shawn, the DC metropolitan area. Without a doubt. I mean, we'll see it in Baltimore, but probably not from the valuations that you'll see in your market. But before it was up to 4 units. Now we're 5 to 8 units. Obviously, investment property. When I say DSCR, we really didn't get into that, but that is a investment business purpose only loan that is only for investment properties. So you're going to see a lot of people talking about that. The ITIN's back, Foreign National's back. I could even say we're going to have residential transition financing. We actually do have it. But when I say that, we're going to talk about rehab financing, fix and flip or fix and hold. The fix and hold would obviously be a longer term or longer duration product, but the fix and flip is a shorter term. But these are, basically launched in the last 2 weeks. I see non-QM as, certainly evolving from, the core bank statement, DSCR, which pretty much everybody in our space, that's really what it evolved from. And all of this is really built upon those core programs. So that is our bread and butter, and that's what we do the most of. But we could do another segment on the ITIN for sure, because that absolutely is an underserved market. These folks are hardworking folks that really don't have any options in terms of financing for real estate. And there are, we're not the only ones that are doing it. This is it's a product. There's liquidity on it. And again, it performs amazingly well.
Got it. That's good to know. Well, Jack, I appreciate it, man. Like, we'll definitely get together and talk about these more. There's a lot of good information that I know that we've provided to people today. And obviously you are the expert at this and helping guide me through the process a lot. I'm learning a lot by going through this as well. But like, how can we help you? Like, what do you need? And let us know how to connect with you as well. Because you're an account executive that serves brokers and such. But like, what is it that, anybody that's out here listening can do to help you?
Listen, I always feel like I'm the one that's trying to help. To help me is like steer a referral partner that wants to learn about the program to Shawn, and ultimately that may result in my company helping a borrower that may have been told no attain the American dream and buy a house. That's the cool thing about it. The more people that know about the options, because even let's say 2 years ago, people, it was almost like frowned, like I don't need to do that. Well, now I think that people realize that you need to capture every loan, this is an interesting environment that we're in right now, and it's cyclical. What we do is cyclical. So hopefully rates stay in a range. I know Shawn probably feels the same way about that. Concerns me a little bit, but the best thing that could possibly happen would be that the inventories build up, especially in our market, because we can benefit from that. But it's pretty slim pickings in terms of inventory in our market. And hey, anything I can do for any of you, I'm here to help, educate, and hopefully help some folks, finance the dream.
And how do we connect with you, Jack?
Okay, so that's great. Hey, email is always great.
You sure about that?
Hey, well, you can call me. So,
so what's the phone number? The bet, yeah.
All
read
right,
it out to us so we put it in the chat.
443.
Yep.
356 2500. And the email is jlevi, Levi, at oaktreefunding.com. And the last thing I'll say, guys, our website, it's very easy, nonqmexpert.com. We're probably one of the only guys out there that you can go on there and look at our guidelines. You can look at our matrices. You can look at, well, the rate sheets are separate, but you can look at our actual guidelines. If anybody was inclined to look at these hundreds and hundreds of pages, it's there for the taking. So I don't know that too many people do that, but I can think of better things to do than read the.
That's when I'll call you. That's when I'll call you. I definitely won't text you then. I'll call you.
Take my word for it. You got better things to do. But I appreciate the opportunity to get in front of everybody, and
Oh, we're not finished yet. You got one more question.
Good.
Jack, you get one question. I apologize. You get one person, one question. Who would it be and what would you ask?
One person, live or dead? One person, one question.
Who would it be and what would you ask?
Oh my gosh. Could it be like a.
Could be anybody you want.
I would say, let's say, this is going to kind of date me a little bit, but I would ask John Lennon, because he was killed when he was only 40 years old, and I would ask him what inspired him, and his incredible creativity. Yeah, I think it would be like somebody like that. Somebody that I think is a really creative artist, and what inspired him, so I think, like, what would he have done had he still been here 40 years later? I mean, it was something like that. He would have been about 80 years old now. He was killed in 1980. Yeah. Wow. He would have been 83 years old.
And you listen to a lot of his
I know
music?
that's kind of out in left field, but
no, it's not. Nothing's out in left field. That's the reason. Like this is honestly like my favorite part of the show, is to hear people's perspectives on this, and this is the part about the purpose piece. And so, sounds like you like music.
Yeah, I do.
A
And I'm
good bit.
reading a book about John Lennon, and he was an interesting guy. Did a lot in 40 years, man.
Got it. Well, everybody, if there's anything that, that we can do to help you in any way, please don't hesitate to reach out. Like I always say, it'd be such a shame for me to have folks like Jack Levy or Levy. I apologize, Jack Levy, in the network and not share him and share these resources. So again, like I said, if there's anything that I can do in any way to help anybody, I'm here to do so. Please remain as safe and as healthy as you possibly can. And I think we're back next week. I'm not sure. No, we're not back next week, but the following week we will have a guest. But Jack, I'd ask you to hang on for another minute after I close out. But thank you for your time today. It was a great conversation. I appreciate it.
I appreciate it as well. Thanks, everybody.